Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Before I get into the analysis, I have to first thank all of you, each and every one of you, for your likes, your comments, your shares on this YouTube channel. We broke a record this week. We have over 10,000 views, working its way now closer to 11,000 views. And that's all thanks to you. Thanks for sharing it. Our goal is to not only educate the public, but to help those who don't know how to manage risk, learn how to manage risk. And while the charts are a great tool for picking stocks, for picking buys and sells, it's an even better tool for managing risk. And I'm going to disclose some of those tips for you as we look at this chart. Now, again, getting back to the diamonds. The diamonds is the only target that did not hit on the upside. Now, remember, if you go back and listen to the recording from last week, I gave a two-part forecast where I said the markets would go up and then eventually pull back. And so this target that we have down here at 318.10 is still the downside target. But in order to get there, I want to explain some of the mixed signals that we're seeing here, and then I'm going to get into a little bit more of the geopolitical discussion so you can see how that's going to affect the markets moving forward. If I zoom in here, you're going to see that we actually have a bullish engulfing candle here that follows a bearish harami. Now, when that happens, these more or less cancel each other out, and I use what's called the summation principle. You take these three candles and you start to the left here where the market opened right here. So you'll say, okay, the market opened here. Where did it close this week? Well, today it closed up here. See, there's the body of your candle, so it's green. Now, you take the high, which is here, and you draw your upside shadow, and you take the low from today, and there's your downside shadow. So basically, you have another green candle. When you surmise all of this, you have a green candle. It kind of matches what we've seen at the top right there. Now, that's not the only conflicting signal that we have. If you look down below, you're going to see that the stochastics is moving up while the CCI is going down. So if you take out your trading checklist, we're not going to have signals one way or the other, buy or sell. So what do? You protect. If you have a long position, you protect with stop losses below the market. I constantly draw these role reversals where you take a resistance point here, once broken here, turns into support. So if you're long the market and the candles start dropping and closing below that support level, then you're almost guaranteed that's also going to break out below this moving average. So this is an area where you would stop yourself out. Now, for us option traders, we could still take a short position thanks to the diagonal spreads that we do. And we make money from a thing called time decay. So over this weekend, while the markets are closed, our option traders are making money on the short side of those spreads because time erosion doesn't stop just because the market is closed. So again, just a little bit of a lesson there for you. I'm going to keep that line in place. Again, 318.10. And now I'm going to look at the Qs. Now, according to a lot of the commentary on the YouTube page, everyone announced right away when that upside target hit. And that was right away, right at the beginning of the week. And so the upside target for the Qs is 317.70. And then I have this line moving forward. My downside target is still in place. As I said, at least 5 times in the questions that I answered and addressed over 340 questions and comments over the course of the week. A lot of times I'm up till midnight helping people get those questions answered. So again, thank you. I'm not complaining. Believe me, I'm excited for all your excitement, and we're going to keep that going. So keep the questions and comments coming for sure. All right, so this downside target is still going to be in place because I have that as, guess what? The role reversal. Former resistance, broken, turns to support. And then I'm going to explain why this is still a downside target. I will often talk about what's called a stale green light. What is that? That's when we have all these green candles lined up in a row. We now have 8 green candles in a row. We haven't had that in a very long time. Now the volume is still maintaining, but 8 green candles in a row tells us there's a great chance, not even a good chance, there's a great chance we're going to see a red candle come up soon. It could be Monday, it could be Tuesday, it could be Wednesday, it doesn't matter. But we have to watch the drop in the volume. A drop in volume tells us that all this buying activity is starting to subside. The momentum is dropping. So I'm still keeping that downside target. And again, we have some mixed signals. Stochastics is still going up, but I put much more weight down into the CCI. One of the most significant sell signals that you're going to get is when you have a negative divergence on that CCI. Let me show you. On this high, on the CCI right here, we had a price high right here. See this? And then we moved on to go to a much higher price high on the candles. But look what happened to the CCI. We had a much lower high. So there's your divergence. It's a negative divergence. If you go back and look at any chart over any time frame, when you see negative divergences like that, it works out to the downside about 95% of the time, almost 100% of the time when you're dealing with the VIX, of course, because the negative divergences really carry a lot of weight with regard to the momentum changes. That's the mathematical formula that Don Lambert put together in the 80s, and that's one of my favorite oscillators right there. And that's the CCI. Learn more about that. All right, so let's go on and talk about IWM. Now, IWM is the small cap ETF. Look what's happening. Another bullish engulfing candle, right? But it's right at a key roll reversal. This line right here, see this big long line? If I go back to the weekly chart, that is a significant resistance area because we're taking a step down in the market. See, this was support back here. I talked about that at the beginning of the year, right around 210. We broke out below 210, then 210 turned into resistance. Then we had 187 to 190 support, broke out below support, turned into resistance. It's still holding as resistance. Now, the weekly chart, you may have heard me say this before, the weekly chart takes precedent over the daily chart. So let's analyze these candles for a moment. We have green, green, green on the way up at resistance. What's happening to volume? Very, very different picture than what we saw in the daily. We have a drop in volume on the weekly as the price is going up. See that? We have a super wide divergence between the K and the D. That's on the stochastics. That normally does not happen in such a wide divergence. So that is bearish. And we have an overbought condition on the CCI. So when in doubt, if you have conflict in the daily charts, flip it to the weekly chart. Remember, the weekly chart carries more weight than the daily chart, and it will help you with the risk management decisions that you have to make. Now, if we stay over this now resistance and it turns back to support, if you decide to buy anything in this area above the market, you're now using that support level as a place to stop yourself out. That's it. Now, even on the way up, for those that trade options with me, we could still make money with put spreads. Even though we have a negative delta, we could still make money on the way up, depending on what we do with the short side of the spread. If you're interested in learning more about that, go to Market Rebellion. There's a number in the description box you can call and have them set up an appointment with you to find out what you need. You can find out how you can get in touch with me, how you can plug into my webinars, how you could even, if you want to get me as a one-on-one coach, I do that. Now, that part is a little bit more difficult because I'm booked out until January 2023, but we do have people getting me one-on-one in 1 hour sessions, and they're all very happy. You could ask any one of them for sure. In fact, if any of the coaching clients are listening to this right now and you want to add a comment in the box down there, go right ahead. You're just helping your neighbor out when you do that. All right, so that's IWM. Let's take a look at the spiders. Now, I'll be seeing Tommy Lee in Dallas at RebelCon in September, and I want to have a good long conversation with him as to why he believes that we're going to go and set new highs on the SPX by the end of the year. I not only disagree with that, but I strongly disagree with that, and I'm going to show you the evidence in a little bit when I get to my other charts. But I think that's almost impossible to happen by the end of this year. But on the same note, I have a downside target of the 2020 lows. I had to move that back. I do not think that's going to happen by the end of the year, but I do believe it's going to happen. And again, I'll show you the evidence as to why. Now, remember, this was my upside target last week now, before any of these candles were here. I said we would go up first. We did hit that high on Wednesday, and then guess what? Yesterday, we had a bearish harami. See that? And today, we completed the pivot point to the downside. So SPY is looking a lot different than the diamonds and even the Qs. But look what's happening down below. We have a wide divergence, again, from the moving average. Take out your trading checklist. The stochastics is overbought. The CCI today crossed with a sell signal. And not only did it cross with a sell signal, but it crossed and formed a negative divergence. Remember, this high here matches with these price highs here. We had a higher high, but we have lower highs on the CCI. Notice that this happened back here as well, right before the big sell-off. We had the CCI down here, right? See that at the high. On these price highs, we went to a slightly higher high, but we went to a dramatically lower high on the CCI. There was your negative divergence right before it plummeted into June. All right, so that is something to keep an eye on. Remember, risk management is key. If you're long the market at this particular point, I would say right below the moving average would be a good place to get you stopped out of any long positions. And for you option traders out there, we're going to keep rolling our SPY put spreads and enjoying the time decay like we are with all the rest of our spreads. So that's SPY. The downside target, I don't think I mentioned that last week. I had to type it into the comments. My downside target on SPY is 400.31, right? $400.31 right there. And I'm keeping that in place because that too is a roll reversal support level. Again, to repeat, because repetition is the best teacher, resistance broken turns to support. It's that little zigzag that I draw all the time in this little stick figure form. On the way down, does the opposite. When support is broken, it turns to resistance. Memorize these and practice that. You want a little homework? Go back and look at any chart. Draw some horizontal lines and look at the relationship between support and resistance and how it flips back and forth. It's not a phenomenon. It's a common occurrence. More common than you might think, actually. All right, so that's SPY. Now the VIX. Now we are trading the VIX, or more or less we're trading the VIX through UVXY. Our directional traders get in and out of that. We also have a position in SQQQ, which is inversely related to the Qs. We're really enjoying the extra premium there as well. But let me just show you some highlights here. We have not yet hit my upside target on the VIX, which is 28.53. This is my intermediate upside target, 28.53. We've hit my downside already. We have not hit the upside. I have a much longer term target from back here of 41.88 right there. I do believe that we'll eventually see that by the end of this year. I'll go that far out and say that the 41.88 on the VIX will be a year-end target for sure. But what we see here is almost a textbook inverted hammer. If we didn't have any shadow underneath that, that would be a classic bullish candle. We came close to an inverted hammer yesterday as well. And the VIX now has 4 red candles in a row. 4. Early in the week, if you recall, we gapped up on the VIX right here. And guess what happened? 100% of the time gaps fill, and it did that. But now we have a wide divergence from this moving average. We have the oscillators showing a positive divergence, right? It's the opposite of a negative, obviously. We have a low price here on the VIX with a lower low here, but a higher low on the CCI, all right? Repetition's the best teacher. Go ahead. Go look for them. Look at 20 charts a day and try to find each one of these signals, and you'll become a master at chart reading for sure. All right, now, I've had some comments of people saying, why are you going so far into the geopolitical events? Well, I have to. Many of you know I have a military background. I spent a lot of time in the military. I spent time on flight decks. I also spent 12 years as a CB, combat warfare specialist. I created the training program for the CBs. And one of the most important pieces of work we've done is to train our sailors on anti-terrorism. So we had a lot of intelligence way back when, where we uncovered terrorist training camps actually north of Tampa, Florida. And I would not be surprised, I'm removed from the military now, but I would not be surprised at all if there's still some of these camps going on in rural Florida. I can't vouch for that now. I could have vouched for that when I was active, but that is the condition that I address all the time. And I want to show you this because it's very important that you look around. Listen, I told this on a conference call just a little while ago. I tell people that if I were banging on the front door of your house because I saw a tornado heading your way, you might or might not believe me, but at least I'm doing my best to send out the warning and get you to look out the window. I'm just telling you to look out the window. Now, here's where the question marks start to pop up. Top dog in Al-Qaeda evidently was killed in a drone strike. All right, now what's wrong with this picture? Well, being part of the military, believe it or not, you may have heard these stories. In a wartime act, you could still be brought up on murder charges. So they have to, absolutely have to put out what's called the mission data. We have to know what happened with the details. They analyze over and over again to make sure it was done by the book. In this instance, not only is there no DNA evidence, but there's no mission data. And the CIA is pretty quiet about what's going on. That's a question mark. Remember, I'm creating question marks. Where is this leading? Well, the question mark, I kept digging because I remember that al-Zawahiri died 2 years ago of natural causes. Now, this goes back. Look at the date, November 22nd, 2020. Now, Al-Qaeda leaders have a tendency to be like cats. They have 9 lives, and they tend to die more than one time. But this, for me, is a very big question mark. Again, it was very open. Personally, I don't believe it. I just can't believe it because it doesn't fit with the protocol. It doesn't fit at all at what we would trained to do in a combat situation. But again, question marks left unanswered tells me that something is going on behind the scenes. Now, look at the date. This is August 2nd. I pulled this one up the very same day. Now, this is when the State Department starts warning Americans about travel. Now, when I pull up this slide, I want you to think of American Airlines, Delta Airlines, Carnival Cruise, Norwegian Cruise Lines. Think about that. What could a warning like this going out to travelers mean to stocks that are traded, publicly? And what could that mean for you if you're investing in those stocks? Well, question marks should help you at least identify where the risk points are so you could defend against that. So this is something I found very curious because even without any evidence, DNA evidence, and the sort of any kind of emission data, this came out immediately as soon as that news was put out. Now let's go on to what's happening in Taiwan. Many of you know that tensions were high when Pelosi was flying to Taiwan. And this is the Washington Post. Now, I want you to understand that Pelosi met with Taiwan semiconductor heads because they're talking about building a chip factory in Arizona. One of the question marks I have is, hey, why didn't you invite the heads of TSMC to Arizona and take them out to dinner here without any threat of, possibly causing World War III? Well, they did what they had to do, but here's how the sequence unfolded. Right here, China puts out a warning. And I wanted to spend a little time talking about this. For any of you who have been to China, it's very important that you understand that in China, there's a lot of emphasis placed on saving face. You do not want to embarrass yourself or anyone that you have respect for. You never want to do that, especially in public. All right. When I used to do seminars in China, I would go there regularly throughout the year. I would do my little circuit from Hong Kong to Taiwan to mainland China and do that triangle. I was told very clearly that if I ask a question of the audience, chances are hands wouldn't go up. Why? Because the attendee would not want to either embarrass the speaker by not answering the question properly or whatever reason, or they wouldn't want to embarrass themselves by possibly looking foolish. So the hands would never go up. But if I went off on a breakout session, I would be swarmed with one-on-one questions like there was no tomorrow. Why am I telling you this story? Here's why. Because the heads of Taiwan Semi actually put out a warning. Look at the date again, right? This is right around the times when tensions were starting to build, that it would devastate global supply. Now, let's go talk some military. Now, John Kirby, who's the spokesman for the Pentagon, is putting out mixed signals. Again, go back and look at some of the footage on the press conferences that Biden gave when asked if he would defend Taiwan if China would invade their territory. And immediately he would say yes. They backpedaled on that. Now all of a sudden the Pentagon is backpedaling from even looking like they're going to support Taiwan independence. What does this do? It creates confusion. It creates mixed signals. It's us losing face because it looks like we don't want to commit either way. Right now, I'm going very quickly through these slides. This is from another news source. They're conducting joint exercises. Now, there's live rounds being fired. Remember, last time I was talking about the Ronald Reagan moving into the South China Sea. Look at how close the Ronald Reagan is to all the activity. Right now, there's live missile fire, and I'm going to bring this back again to the chip makers. Right? There's live missile fire going on all around the island here. I'm drawing these blue boxes. Now, what is this actually doing? It's creating a blockade without saying you're creating a blockade. Remember, they already put out the warning and they slap restrictions on trade right now for fish and citrus. But any other ships, particularly the container ships that are getting bogged down because of this tension here, it's going to slow the supply chain down again. Do we really need that in a recession? No, we don't. All right, this is very quick. They slapped restrictions on Taiwan. This came out immediately. Again, look at the date, August 3rd. This was Wednesday. And then what happens? This is coming out about China and their relationship with BlackRock and vice versa. Let me tell you why we're not going to go into World War III, right? Because if we did, China would not have to fire a single weapon. Why? Because all they have to do is hit the sell button. Go back and look at Yahoo Finance. Pull up any major stock. And you're going to find BlackRock anywhere in the top 3 or 4 of the major holders. They currently hold $9.5 trillion of equity, and that's not counting the real estate that they're buying up in the U.S. You have to understand, if they hit the sell button here, or if China goes out and starts selling the bonds here, they hold over $1 trillion in bonds. What will happen? The bond market will collapse. The stock market will collapse. Interest rates will go up. It'll create defaults like dominoes going down faster than you could imagine. And we go into complete free fall. That's why we're not going to see World War III. We're already trying to hold up our economy as it is and keeping inflation in control. But we're doing a poor job at that, thanks to the Fed. Now, here's my proof that we're not going to get to highs. I originally pulled up a 100-year chart of the Dow, and you could do this yourself. It's pretty easy to find on the web. But if I pulled up 100 years, it would be very hard for you to see the price action. The gray areas that you see here going up and down vertically on this chart are the recessionary periods in time throughout history. Now, here's the thing. You see my little box up here, right? The Dow has dropped before and during all of the recessions of the last 100 years. I'm only showing you the 60. Dropped on all recessions over the last 100 years except for 1 year where it rallied very, very slightly because it was a very brief recession. Never, ever in the history of our economy have we ever broken into new highs during a recession. Let this chart sink in here, folks, because this is the most recent chart, and we have just entered into the beginning stages of recession. If you look at what happened with Bank of England, they raised rates to the highest level in 27 years, and their plan for tackling inflation is going out to 2025. My belief, and this is my personal belief based on data and technicals, is that these March 2020 lows are still a conservative target for me. We may not hit that by the end of the year, but I do believe we're going to hit that. More of a stretch would be, believe it or not, for the Dow to get down to 20,000 on this roll reversal. Remember those lines I drew, the roll reversals. There's resistance. Resistance was broken, turned to support. It could do a little zigzag like this, but I think ultimately we're going to go into a deep recession. So be prepared. I am not a fearmonger. I've had some people say, oh, I'm tired of hearing about your Q and your QAnons. Well, first of all, I've never mentioned Q until right now when I'm addressing that. And there's no such thing as a QAnon for those of you who have done the research, by the way. But my point is that you have to dig for the news. Turn off the television, please. Don't just gobble up what they're feeding you. Search for it. Search international news channels. Check BBC. Check Australia. Check around the world. Check what's happening in Israel. Connect the dots and see how many question marks you can come up with, and then figure out what that would do to the overall market. Remember what I was saying? If the State Department is putting out a warning to travelers, look at Delta Airlines here. Just take a look at DLR. I'm not making a forecast. I'm just showing you. How is it that the State Department comes out about travel in the negative sort of way and Delta goes up? Well, right now, all the signals are starting to point lower. And we have, how many? 8 green candles in a row as well. There's a still green light for you. Now, I don't have a position in Delta or the airlines or cruise lines. I do not. But I do have positions, bearish positions in IWM, QQQ, spiders. I have them all. And I am positioned in such a way where if the market moves against me, let's say it goes a little bit higher, and okay, Tommy Lee comes out and says, see, I told you so, I could still make money on those put spreads if I adjust the positions correctly. Now, again, I said before, I strongly disagree with us setting a new high for the SPX or any market for that matter. But my opinion should not be a reason for you to be so confident to go take incredibly big short positions. Don't do that. Trade in moderation. Stay in check. Follow the charts. Follow the data. Keep your stops in place. And I'll check back with you next week. Again, I cannot thank you enough for all the likes, the comments, the shares. The reason we went over 10,000 views last week is because you're sharing the video with your friends and family and maybe even coworkers. Thank you. Remember what I said before, the more people who learn about the charts, the more significant the charts become and the more reliable the signals become as well. In addition to that, it becomes one of the best, if not the best, risk management tool you're going to find. Folks, have a great weekend. We'll talk to you next time. Bye-bye.
Hello, John Najarian here. If you want to trade like a rebel, if you want to party like a rebel, well, you got to come to RebelCon 2022. It's going to be in Dallas, Texas, at the fabulous Four Seasons Resort. We start the 21st of September, go until September 24th. It will be more fun and more live trading than we've ever done before. That's why it's called RebelCon 2022. We're going to have barbecues and double the amount of live trading. So if you want to book that now, make sure you do, because the guest speakers, as soon as we announce those, this thing's going to be sold out. It's going to be something you do not want to miss. Limited to 250 people. Sign up now for RebelCon 2022 at the Four Seasons in Dallas, Texas.
Welcome to the rebellion.